Is the housing market going to crash? Are we in a real estate bubble? Is there going to be a repeat of 2008, 2009? I want to answer that question for you today. My name's Miles Pitcher. I'm the owner of Superior Lending. I'm excited to show you some data that supports and says we will not be in a housing crisis or a bubble. This is info that I believe and experts in the market believe. Let's take a look at this first chart here. This shows that there is a shortage of homes on the market today, not a surplus. The supply of inventory needed to sustain a normal real estate market is approximately 6 months. Anything more than that is an overabundance and will cause prices to depreciate. Anything less than that is a shortage and will lead to a continued price appreciation. So check this chart out. For historical context, there were too many homes for sale during the housing crisis of 08 and 09, and that caused prices to tumble. So while today our supply is growing, we still have a shortage of inventory available. So in this chart you can see that we are about 3 months of supply right now today. Now this is more supply than we had in 2021, and that's what the news is focusing on. They continue to use the headlines to try to attract attention and say inventory is rising at a rapid rate. The fact is we are still in a shortage, and we still have we're in a situation where it is supply and demand, and the demand still surpasses what our supply is by quite a bit. Another reason for the inventory being so low is that we are underbuilt. And when you couple that with the ongoing buyer demand, as millennials age into their peak home buying years, it puts additional upward pressure on home prices. So the limited supply compared to buyer demand is why experts forecast home prices are not going to fall at this time. This next chart requires a little explanation. So this is a historical chart of the Mortgage Credit Availability Index. And what is that? So we'll say the MCAI is calculated using several factors related to borrower eligibility. So that includes credit score, the loan type, the loan to value, or a measure of how much down payment people are putting down. So we look at all those metrics and underwriting criteria over a whole bunch of lenders, and we're able to create this formula or chart that shows the credit availability to borrowers. So during the lead up to the housing crisis of 08-09, it was much easier to get a home loan than it is today. The graph below shows that the data from the Mortgage Bankers Association over the past 18 years. The higher number, the easier it is to get a mortgage. So running up to 2006, banks were creating artificial demand by lowering lending standards, making it easy for just about anyone to qualify for a home loan or refinance their current mortgage. Back then, lending institutions took much greater risk in both the person and the mortgage product offered. So that is a major reason why in 08-09 things led to defaults, foreclosures, and falling prices. Today things are much different. It is much more stringent on what it takes to get a loan, and there's higher standards. In fact, Mark Fleming, chief economist for First American, said credit standards tightening in recent months due to increasing economic certainty and monetary policy tightening. He's saying that there are stricter standards, and this is really going to help us in making sure that there is not a rash of foreclosures like there was last time. The other day I saw a headline in the news that said foreclosures are up 150%. And I thought, that's crazy. So we looked closer at the data and realized that yes, from 2021 to now, they are up 150%. However, if you look how low they were in 2021 to now, it's really a minuscule amount of the market that is dealing with foreclosure. And in fact, the primary reason for that is through COVID, foreclosures that were in process were put on hold or in a moratorium. They have come out of that freeze now, and the majority of all the foreclosures happening right now were from pre-COVID issues that weren't able to be resolved that are now going to foreclosure. So don't always trust the headlines in the news. We are super low on the number of foreclosures. And you can see from the chart that foreclosure activity has been on the way down since the crash because buyers today are more qualified and they're less likely to default on their loans. In addition, homeowners are equity rich and not tapped out. In the run-up to the housing bubble, some homeowners were using their homes as personal ATMs. Many would immediately withdraw their equity once it was built up. When home values began to fall, some homeowners found themselves in negative equity situations where the amount they owed on their mortgage was greater than the value of their home. Some of those households decided to walk away from their homes, and that started the wave of distressed property listings, foreclosures, short sales, which were sold at considerable discounts and continued to lower the value of other homes in the area. Today, prices have risen nicely over the last few years, and that's given homeowners an equity boost. So according to a company that we follow, Black Knight, they say that in total, mortgage holders gained $2.8 trillion of tappable equity over the past 12 months. That's a 34% increase that equates to more than $207,000 in equity available per borrower. That's pretty awesome. It also says that if somebody gets in trouble on their mortgage or in their job, that a foreclosure is most likely not going to happen. They can just sell their home, capture the equity at that point, pay off their debts, and maybe go rent for a while. So, if you are hearing talk about a potential recession, I want you to remember that a housing crisis is very much different than a recession. And in fact, in the last 4 of 6 recessions, home prices have actually increased. And that's pretty cool. So if you have more questions on this, please reach out to me. I'd love to talk to you about this. And in fact, I would love to hear what your concerns are, what questions you have, and how you're feeling about things in the market. My name's Miles Pitcher. I'm the owner of Superior Lending, and I'm happy to help you with any questions, mortgage scenarios that you may have. Have a great week.